Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today's Wednesday, June 30th, 2010. Today is the end of the second quarter in the year, so we could see some stock volatility today due to window dressing, which people sort of push stocks around to get them at a certain price so they can report performance figures. But today we're talking about less money needed, and there was some encouraging news overnight that happened out of the Eurozone as the ECB said that it would lend banks less than expected amounts of money to repay their short-term debts. Now, this is a good thing because there's a lot of concern over the health of the banks in Europe and what their exposure is to the sovereign debt crises around the Eurozone. And this shows that the banks are able to function, and that by having to borrow a lesser amount from the ECB, that means that more banks are actually able to meet their debt obligations on their own. So that was a good thing. As you can see here, just looking at the 5-minute chart, boom, little bid for the euro, and the euro's higher. It was down around 122. Wow, quick 100 pip move right up to 123 before we got a little bit of a sell-off happening here. Now, in the UK, I just want to look at pound dollar. Pound's weaker. We're just under 150. You can see we fell there, but it looks like we're coming back a little bit. Now, in the UK, consumer confidence figures fell to a 6-month low as residents prepare for their budget cuts, and Bank of England policymaker said that the UK recovery is tentative and they could risk sliding back into recession. So this probably means they're going to maintain loose monetary policy as they start to unwind some of the fiscal stimulus through austerity and budget cuts. So we're going to have to see how they respond. But overall, the market has responded favorably to what's going on in Great Britain. There's no surprise there that folks are not confident because of less government spending. Let's take a quick look here at the Aussie. Wow, it looks like the market's kind of shrugging off this news here at pre-market. We had some pre-market news in the U.S. that the ADP employment change came in less than expected. Okay, they were expecting a gain of 60,000 private jobs, and they only got 13,000. So people are starting to think this could be a harbinger of Friday's non-farm payrolls report, which is sort of the granddaddy of all employment reports. But looks like since the market's open, looks like we're probably going to have stocks higher, which means we're in for some risk taking. So we've been flip-flopping around this morning. First we started off risk aversion, then we got the news out of ECB, we're in risk taking, then we got this employment news, so we were back to risk aversion. Now it looks like stocks are higher, so we're back to risk taking. So if you can follow this and keep up, there's some decent money to be made here. So we're just looking at the Aussie real quick. Overnight they had increase in an increase in bank lending and home price figures. We've also got higher home prices in the UK, so it looks like that's coming back a little bit. What else do we want to look at? Let's look at USD versus JPY. Yep, same sort of deal here. All right. The yen was stronger on the risk aversion themes from earlier, and now it's given back a little bit. So that's sort of what we're looking at in the market today. And right here in the U.S., it's all about jobs. I mean, there's just no two ways to slice it. Yesterday may have been an overreaction to negative sentiment in the market, but you still got to remember that economies are fragile. All right, now as long as people are unemployed and unable or unwilling to spend, economic recovery is going to continue to be fragile. And part of the problem is here in the U.S. is that we don't have policies that encourage private sector job growth. All right, as people are afraid of looming tax hikes that are potentially coming down the pike because of reckless government spending. So most of these scares you see here, it's all about confidence. And you can see in the UK they've got reduced consumer confidence. We have it here in the US. It's obvious people don't have confidence in their government to improve conditions, and it really doesn't matter what the policy is. If you think about it, the UK, they don't have consumers don't have confidence there, and they're going through these budget cutting measures. In the US, we don't have confidence, and we're continuing with the spending. So there's not like there's one policy that people are more confident over. It's just that they're not confident in government, period. So we are seeing some economic pockets of strength around the globe, but those that are employed or experience a much different economy than those who aren't. All right, some are beginning to say that this is the new normal, where we'll have economic growth and high unemployment. I beg to differ. All right, I understand the emergency stimulus measures that we needed here in the U.S. to keep us from going over the cliff, but the sooner the government removes the training wheels from the economy, all right, the sooner people are going to learn how to ride again. All right, now it's at this point, the U.S. government's holding us back and not helping us move forward, and I think Friday's non-farm payrolls numbers are going to show just that. So we're going to have to see what happens on Friday, but continue to trade what you see and not what you think is going to happen, and wait for Friday's number. We could see some sideways action going into it, at which time we'll really get a better picture of what's going on in the U.S. As far as jobs growth goes. So that's what we've got for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.